All right, Luke, we're doing something different, but kind of the same, I guess. I've finally got my front teeth back after about 2 weeks of recovery, so I'm back to looking half normal again. But there weren't too many news out this week from the junior space besides a new discovery from Amex Exploration. So we've invited Victor, the CEO, to talk to us about it. He'll be on in the latter part of the conversation. But then you also wanted to talk to me about an easy, and it's a quote unquote easy way to get 10 baggers in junior mining. Maybe I'll just put it in the title for a little bit of clickbait. We can use a little bit of algorithm love there. But before that, we're doing a sort of a year-to-date overview to see what stocks are outperforming so far during the first almost 6 months of the year and why that's happening. Like, what are the drivers? Is there a trend? Can there be some data derived? What's making stocks go up, basically? But of course, not before a quick overview of commodity prices this week. And it's looking at some of the notes I took, it's actually been a decent week. Not great, but decent, unless you're a nickel, lithium, or a natural gas investor. But hey, person you got to blame for that is right in the mirror, waiting for you to actually look at him finally. Yeah, lithium is down 4% this week. That's 70% lower year over year. The pain doesn't seem to be stopping. And I interviewed a battery metals fund manager late last week. It's the last video on the channel before this one that you can watch because I was asking him when the pain is going to stop for lithium and other battery metals, and the answer is basically not anytime soon because the short term in lithium is just tipped to oversupply at the current moment. But again, we talked about China's battery market in that interview, EV demand as a whole over the long run. We talked about the greens losing ground here in Europe. So I'd say if you care about battery metals, just watch it because I don't know too much here to make any kind of intelligent comments. Not that I ever can. But nickel was the second worst performing commodity this week. It was down 2.5%. That's 10% down on the monthly. It's about 25% down year on year, and it's just erased almost all the gains that it's made since the beginning of the year here, and it made those gains sharply, and now they're gone sharplier, if that's a word, which it probably isn't. But nickel had some stuff going for it actually earlier. There was some unrests and quite the strong unrests actually. Those deaths and whatnot, a complete mess really in New Caledonia earlier this year after France had pushed for a voting reform. But that voting reform has now been suspended this week, and that's important because the island nation, it's an island, New Caledonia, that's off the east coast of Australia. It actually produces about 6% of the global supply of nickel, and it holds about 25% of the world's nickel reserves. So when the unrest broke out, there was a sharp spike in the nickel price, and that sharp spike is now pretty much again being erased. And we are back to Indonesia dictating the tempo here, it seems at least. But again, this was also discussed more in depth with that fund manager late last week, who's not too big on nickel, interestingly enough. But yeah, go and watch that video because obviously, why not? I mean, your wife probably doesn't want to see you anyways. Technically, lead is the worst performer this week too. It's down almost 3%. But if you know a lead market expert, do let me know and maybe let them know to pick a different career, something more serious like podcasting, for example. Natural gas down just about 1.5%, which in natural gas land is basically means that it was up this week. But the slight drop is due to a weekly increase in storage, and the U.S. Also has about 25% more reserves than their 5-year average. But after about a 2-year really brutal bear market, jaw-dropping bear market in natural gas, production is still expected to remain on the decline for the foreseeable future. And so there seems to be a slow but steady support for the price. The price hit about a $1.75 low in March, and it's now at about $2.90. Of course, it is in a volatile manner, not in a straight line, but expectations are still for lower production this year. And so normal animal forces at play here, I suppose. Best performing commodities this week were salmon, eggs, and beef, respectively, up 9%, 8%, and 2.8%. And it's looking like the chicken virus is in the news again a lot. So, hey, maybe stack up on long-dated physical egg supply or something. I don't know. But in all seriousness, in terms of the metals, no major moves to the upside this week, but decent stability. Overall, tin is up 2% on the weekly. Supposedly, it would have been up a whole lot more if the demand from China was where it was expected to be. But with their declining PMI numbers, there's a different story happening. Basically, the declining PMI numbers are suggesting some softness in the market, and more specifically internally within China. But at the same time, Indonesia is having more supply issues and more production disruptions are expected in the country as a whole. And this just adds to the whole whatever's happening in Myanmar, the whole story where the country remains on edge, to put it mildly. And so again, disrupting tin exports from Myanmar, which of course puts some air under the price. China demand then suppresses it, and it's kind of like when you're in a crowded office and you need to pass gas. I mean, you're going to do it anyways because you don't want to implode, but it'll be irregular bits and hopefully no pieces, but that's going to, which coincides with the expectations for the tin price, basically. That's what I'm trying to say here. Wow, that got more colorful than I'd expected, but yeah. What else is up? Cheese is up about 4% this week too, but I'm not even going to go that route. The jokes are going to become even worse. Gold and silver had steady weeks, as I said, too, respectively. Up 2 and 1.5%, both not where we want them though. So gold is below 2,400 still. Silver is below 30 still. Gold had an interesting week. It started up calmly, peacefully up until Wednesday, when it had a nice little spike to the upside on the back of the CPI release, which actually came in as expected. So no major surprises there, specifically because the data showed a second month of no month-over-month inflation, with the CPI coming in literally flat, so it's 0.0%. So I suppose gold took that as a sign that we'll see rate cuts soon, and so it ran. But again, not for long. The report was followed by our best buddy Jerome Powell, JP, as we friends like to call him, coming out and saying that, basically saying, don't get the party started. Don't get too excited just yet. We're not ready to cut rates as aggressively because while we are making some progress on inflation, we're not where we have to be to go through with the rate cuts as you'd expected. So I'm paraphrasing here, but that was the main takeaway, and that of course resulted in the DXY, so the dollar up, gold down. Was late on Wednesday, but that kept persisting into, well, the rest of Wednesday basically, because early on Thursday is when the PPI came in. So that's the producer price index, producer inflation. Some people like to believe that the PPI has somewhat of a predicting power, but it showed a 0.2% drop in the PPI. Not a huge deal, but maybe potentially, eventually, perhaps a reason to believe that inflation is cooling off, and or at least quicker than what Powell had in mind when giving that speech on Wednesday, and that we might see lower CPI next time. So the market took that as a positive. So dollar down, gold and silver up, with a pretty sharp rise in the gold price from Thursday through Friday, where it essentially was gold was actually headed below 2,300 and actually dipped a little bit below 2,300, and it then shot up back to 2,340, about 35 is kind of where it's settled right now, an ounce. And yeah, silver kind of followed the same fate too. Now, the ECB did cut interest rates, as opposed technically late last week on June 9, and that was for the first time since 2019 after hitting a record high of 4% earlier this year, which means that my, again, best auntie Lagarde, she seems to be giving in and making king dollar king again, I suppose, or just remaining king. So it's is this what the Fed was waiting for, just to not be the first to blink again? Again, I'm saying again, but I shouldn't say again, actually. But because the main competitors in DXY, some of them have basically started blinking already. But so yeah, we're back below 4% here in Europe, now at 3.75% central bank interest rates, and with no major data expected around interest rates next week. It's actually going to be an interesting week in financial media, mostly because they're going to have to come up with something to talk about, and it's likely to, as always, mostly be noise and speculation, but interesting to follow what kind of nonsense they're going to come up with this week. And yeah, that's it for me for this week. Luke, I don't suppose you want to add too much here on the commodity movements, but you do have a good list of movers over the first 6 months so far this year. So I'll leave it to you to either add something here or kick off the list.
Yeah, I just looked at the cheese price. Never looked at it, but your intro made me have a look, and it's one of the most boring charts I've ever seen in my life. There's just one almost straight line, except for COVID, post-COVID, where the stock, where cheese prices went up 50%. But other than that, it's probably the most boring thing you can look at if you're used to mining stocks.
Well, I'm not. Two things. I'm not surprised that a Dutch person went to look at the cheese price chart Like the only thing after a 10-minute commodity overview that you picked up on was cheese. I'm not surprised. What I am surprised by is that you hadn't looked at it before. So I don't actually don't believe you. I think you have it printed out on your wall and you look at it every day.
Yeah, maybe the European football championship that's about to start makes us eat even more cheese right now, and that's why the prices are going up.
There you
So
go, more demand. I can see that happening.
yeah,
Yeah.
yeah,
Well,
yeah,
how again, I said at the beginning, an easy way to have a 10x in junior mining. I'm gonna put it in the title, probably put some parentheses on it because there's no easy way, obviously. But you
yeah.
seem to have picked up on some sort of a trend. What do you want to talk to me about?
Right, yeah, and in terms of titles, give us the most splashy titles people listening because we need more people watching this stuff. And a boring title is not doing it apparently, and maybe we should do better. So we're looking at the big winners this week of the first 6 months of the year, almost the first 6 months because we are mid-June. And I think I often look, and I think you also look at these very small companies, and maybe these are not the big names, not the established names. We could argue because the established, even the established junior miners, yeah, everybody knows those names. Everybody, at least, who is focused on this industry. And if you look at this list today, you look at names that most people probably never seen before. Tactical Resources, Macro Metals, Rain City Resources. I bet most people never
Hmm.
look at those names, but those are the big winners so far this year. And the trend that I see, and it's not surprising to me because I think we discussed this many times last year when we did these talks, is that it's often related to a restructuring, a rebranding, a new project, a new management team. And that's probably the easiest way to find a three bagger or a five bagger. Because the most exciting thing, of course, is a discovery. But discoveries, I guess that there are about 3,000 people, 3,000 companies looking every day, drilling, sampling, geophysical surveys, and all kinds of exploration work. And only a number of them, maybe one, two, or three per year, maybe five, really make an outstanding discovery. And five per year doesn't is not even the best ones because you barely get one a year if you really look at the big discoveries. And even how to find that one discovery out of in all these 5,000 companies looking. And that's why one of my strategies is also to look at other things that lead to increases in share price other than the discovery. And in my opinion, that's if you just put it into one sort of topic, I would call it restructuring, rebranding, management change, project change. So changing something. And the big winner this year so far is Adyton Resources. It's also a sort of a restructure. The project was already in the company, but they have settled some debts. They have done a financing, got some new people in at lower levels. Because I am of strong opinion that people that need to make it work, the main investors, the management team, and the directors, if they are not positioned in a big way, the likelihood that they are going to work hard for you as a shareholder is really, really low. So if I see debt settlements, and I can see that those debts were with management team because they were waiting for salaries to be paid or whatever reason there's debt, at least they certainly own a lot of stock. Even if it's at 2 cents, it gives them a reason to make that stock, liquid. At some point, they want to make a profit or at least sell that stock. And you cannot do that at 2 cents when there's no one looking. So it gives them an incentive to do something. And if you then start getting new investors on board and start promoting, but you need also a promotable story. And I do think they have that. They are in a what they call world-class belt, and they refer to big projects near them. And if you also have already some ounces on the books yourself, you can also show like, hey, we already have 1.5, 2 million ounces, but we have way more to find. So then you have a promotable story. And if you don't have a story, you cannot finance. If you cannot finance, you're not going to make a discovery. So the early thing leading up to a potential discovery is often the most certain thing that will reward you. And then the discovery, of course, would be the ideal outcome, but less likely. And Adyton is, I think, a big example where nobody cared for a number of years. They restructure at the bottom at a cent or half a cent. and then the thing starts going. And of course, there are many stories like that, so it's not easy to find the best performing ones. But when you look for these type of things, that's where you get your short list, in my opinion.
Is it only the rebrand though with Adyton, or is the rebrand just sort of the beginning of real work being done? Because a rebrand, if it really is only a rebrand, then you typically see, I would expect, not typically, I shouldn't say that, I would expect that you would see a spike in the price for a short period of time, not for a long period of time. But so if you have a rebranding followed up by decent work being done, that's where stories like Awalé come to mind. You also have in the list here, you have it labeled as discovery. Fair enough, they did make a big discovery, so but I get that part. But there was also a restructure and no rebrand, but a restructure right before that discovery. And so the real work in Awalé was actually really done after the restructure. So with the Adytons and the Black Mammoth metals, those are so Adyton's done a 24x, I suppose, in Black Mammoth, or 13x or whatever. Macro metals a 10x. Is it really just the restructuring pushing the share price up?
Well, in an ideal case, as an investor, you want to buy buy stock and see it go up immediately, or at least soon after you buy it. That would be the most rewarding feeling, because you feel, oh, I'm a genius. I'm buying at 2 cents, and 2 months later it's at 12 cents or whatever. But it's not just that it's fun that you see your own position go up, but also this company indeed needs to finance. And Awalé, they restructured and financed, but didn't go up until a month before the discovery, or maybe 2 weeks before the discovery. So I would argue that yes, them changing the team and doing the right financing with perhaps better investors and doing a better job in terms of promotion and getting a good presentation out and all those things help. But the stock didn't trade above 12 cents for a prolonged period of time, only until a couple of weeks before the discovery. Whether or not that was a bit of a leak, or whether or not that was luck or whatever it was, but it just didn't trade up. And ideally, I mean, I buy a stock, and within, doesn't even have to be months. Sometimes I wait for a year, but at some point the sellers dry up. I mean, you get seller exhaustion or whatever reason, promotion, getting an active investor who starts buying in the market and cleans up sort of the sellers. There's always different reasons, but ideally the stock trades up before they really start exploring, start drilling, because the outcome of drilling is very often disappointing. Expectation is always high, outcome most often disappointing, and then you get often a drop in the share price again. So ideally, I buy a stock when nobody is excited yet, and when you see signs that a company starts to become more active again. And Adyton, in my opinion, has been, a straight line for months and months and months, and suddenly started trading up. And that's not for no reason. That's because they settle the debt, they get new people involved, they do a financing, they promote again, and then it starts moving. And they didn't make a new discovery yet. So I think it's, sort of a restructure, rebranding, new management team, promotion. And that's what it got to 12 cents, not a new discovery, or even 20 cents for a while.
What do you then look for when you look at something like this, where you're thinking, because getting involved on the back of the promote or in the back of the restructuring could be dangerous at times, because sometimes, I mean, the air could get out of the balloon quickly. What do you look for it to be a sustainable restructuring? Again, something that's followed up by a change in management, but also, again, good work being done.
Yeah, I think if I would have bought Adyton at 2 cents or 1 cent, and I would have be up 10x or 15x or even 5x at this 25 million market cap, I would probably have sold, maybe already earlier, but I would probably have sold at least 50% of my position, if not 70 or 80%, if not everything. Because I think at this valuation, and I'm not saying it, I mean, it could go to 50 million or 100 million if they do a good job, but at this point you become more reliable on, they have to do something that really backs this value or adds to this value. So perhaps a discovery, finding new, I mean, it doesn't necessarily have to be a drill discovery yet, but they have to come up with information, with news that encourages new people or current investors to buy more stock, to make it go up. And when the stock is already up 10x, then of course more and more people start thinking about selling. Doesn't have to be, but the risk just becomes more high. Like you need more good news of bigger impact to get it from 25 million to 100 million than to get it from 2 million, for example, to 20 million. So I would, since this market you see so often a spike and the stock then comes back down again, is only for that reason I would go risk off by selling at least 50 or 70% if I was sitting on this big move. And if I really like the story, if for some reason something significantly changed, I could consider buying this stock. But right now I don't see that, but I also don't have the complete picture. Maybe things are happening and the stock can go way higher, but it depends where you stand. I'm not an investor right now, and I'm not considering Adyton right now, because indeed there are people with 5x, 10x type wins. Probably and hopefully people that have a long-term vision with this company and are not selling right now. And it doesn't seem to be, I mean, I don't see big selling. So it appears that the people who got in and have free trading stock are not selling yet.
Oh, I just have a personal rule that if I see a CEO with a Ferrari, I'm buying the stock. If the CEO is with a Lamborghini, I'm selling the stock. It's binary and it works all the time. But jokes aside, when you look at these things, getting involved in them that early on it takes a certain level of understanding of the sector, I suppose, that I'm just not quite there yet. And I see that in our dynamics that you and I have. When I talk to you about some company and I tell you like, hey, look at this, I found the next big thing, and you're like, no, it's not the next. Like to you, it's kind of obvious, and then I mean, most of the time so far, you turn out to be right. So is this doable for someone who doesn't do it like yourself full time?
Well, if you don't do it full time, I consider myself full time already for more than 10 years, even if I had a full time job for until 2021, because I was doing it in the weekend, the evening. So if you're really excited about the sector, you can also do it next to your job. But of course, not everybody does that. And if you don't do it and you don't have time for it, I think you don't even have to spend that much time as long as you accept not being part of every winner. If you just focus, I mean, if you spend the weekend or Saturday, or I mean, you have to spend some time. You cannot just be serially successful as an investor in this space without spending some level of time or getting good advice. So perhaps a certain newsletter writer gives you confidence enough to buy something without doing a lot of work yourself. And if, for example, Eric Coffin gives you good advice, and of his 10 picks, 4 do really well, and or maybe 3 do really well, and 2 or 3 do okay, and 3 of them do badly, and that gives you enough information, maybe that works. I mean, he has been involved in Great Bear. I mean, if you would have bought Great Bear based on Eric Coffin's advice, then you would have done well, or Virginia way earlier. That could be a way. But if you want to really outsmart most people in this sector and make big returns, then you need to spend time and you need to look into what are the causes of these increases. And one mistake I made, and maybe something that most people look at, is founders metals, for example. I got stock offered at 20 cents when the story was not promoted yet. I saw that they were historic high grade results, and I considered it a little bit of a promote. I was like, okay, they will probably drill, twin it, or repeat it, or drill at least close to these historicals. But this project was owned by somebody with a good geological view on things and corporate view on things. So why would he sell if this was a big thing? So I was a bit skeptical, and I said, no, thank you. But the stock did really well. It went from 20 cents to $2, and there were even warrants involved. So 30-cent warrants, I think, in that financing. And I thought of it as a bit of a rebranding, promote. And if I would have done it, I probably would have sold it at 30 or 40 cents, to be honest. But they really did better than I expected. And I would not have played it. Even if I would have bought it at 20 cents, I would not have played it until $2. Yeah, so what I'm saying is I'm certainly not always right. And I just try to make the best bet based on information available and based on conversation you can have with the companies. And my conclusion is also out of this list is that your best bet is a company that already has a good management team or already has a good project, but has also a couple of key attributes. That means no debt, preferably no warrants or very little warrants, and preferably insiders who own a lot or are accumulating, or a financing is being announced and you can see that only a limited number of people participate, like 10 people, 5 people, maybe 20. Because if you see 100 people participating in a financing, then you know it gets already a distributed audience. And in 4 months' time, when it's free trading, in most cases, you see some people selling because they want to write the warrant only. And that's why I always talk about, we talked about Great Quest recently. Stock went from 1 cent to 4 cents right now, and it's still building. They don't have a website yet. If you look at which one here? Oh yeah, Black Mammoth Metals is the second biggest mover this year on okay volume. $15,000 a day is not a whole lot, but it's a company without a real website. And another story that you see debt settlement, you see financing, you see new projects. So these things you should look into and spend a little bit of time on and see if you can maybe not even buy the stock, but if you can predict a move. Often it's new people, financing, debt settlement, positioning type activity, financing a new project, and a good share structure, and just put it on your list and follow it, because I feel that these things become a little bit predictable. But of course, you're playing a very different game to buy these type of things than listening to a promote that's already going, where somebody has a good website, a good deck, is at the conference, is telling the story. Then you already have a bit of an established name. That's different than these sort of new companies, as you if you call it a new company, perhaps.
Price is also a part of that too, though, right? Buying sort of at the right price, or buying at a spot where not a lot can go wrong. And what I mean by that, or at least what I'm attracted to, and tell me if and where that's wrong. But what I'm attracted to is really low prices in the first place. So if it's like from $1 million to a $3 million market cap, and that's probably just kind of my degenerate thinking there and the lack of experience. But again, for a company to fall to that kind of valuation, something must have broken within the company. A permit is taken away, a manager did something. I can think about the Awalé example, where the company was being completely mismanaged before the management change, and it was kind of a cow meant to be milked, really. And at that point, it got fixed. They came decent promotion, they came decent discoveries. And so it all worked out, which is why it went from a 3 million market cap to a high of about 80. Again, a rather large spike there. Now it's settling down. Now, anyways, the point was, something must have. I'm attracted to those broken companies that can get fixed, because my thinking is, if it's a 1 or 2 million or $3 million market cap, not a lot of things have to go right after the company's been fixed. So if you have confidence, if you talk to the people who are in the process of fixing the company and you have confidence in them fixing it, then not a lot has to go right. I mean, if Awalé hadn't drilled a 1,500 gram meter hole, but just a couple of consistent 90 or 100 gram meter holes, this thing was still going to be, $30 million market cap valuation, which is still a 10x, still a large increase for me. There was luck involved with all these things, of course, and so there was this big hole. But anyways, the point is, yeah, cheap companies that were broken and are getting fixed. Is that what you pay attention to as well?
Yes. And Awalé, I think, didn't really go up before the discovery. Well, not until a month or something before the discovery. So even though it was fixed and things were structurally improved compared to the situation 2 years before, for sure. The ones that I just mentioned already moved before the big news, just because the company is cleaned up with new people and new, people perhaps even driving the price a little bit by buying all the stock, and sellers get exhausted. There's no seller left almost after years sometimes. And sometimes there's a story like Adyton, which is not the ideal in a way, because the outstanding shares is 207 million. That's not what I call typically a good structure, unless that 207 million is owned by just a number of people. But in most cases, that requires a rollback and a big financing before really most of it is owned by a couple of people. So in most cases, indeed, something got broken, or it was just a promote in 2020, and the promote died, and the project is still sitting within the company. Mostly companies who already have a discovery behind them will not go back to that level, I think. Not 3 million typically, or 2 million or 1 million. But these 1 or 2 or 3 million companies are also risky because there are many of them, and most of them I wouldn't touch. You need to see something happen, the right people getting involved, or insiders keep on buying over the years, so that they must have. Then you can call them and say, hey, why are you buying? I mean, what is it that excites you about this $3 million company enough to keep on buying? That could already be a signal, but you need a signal, insiders buying or insiders owning a lot or a new project, or something needs to give you that signal, or you need to know the people, and they should tell you like, hey, we are looking and we only look for the best project, so it can take a long time, but we are looking for a good new project. That could be enough, but then it takes a bit of time. If you look at this list, there's only, and especially the Canadian companies, almost all of them that are not discovery driven but restructure driven have a share structure below 50 million shares, and have a new project and a new management team. So I think looking for those things is something that can work out and has worked out for me a lot. If you look at the Australian ones, the big Australian winner, and talking about Ferraris and Lamborghinis, I saw Macro Metals standing there, number 3, and I was looking at all the different news releases. I couldn't really find out why is this stock up so much. And they had a nickel, a lithium acquisition. They canceled it. And on the cancellation, that's when it started moving, but didn't make sense to me until I found this news release here, where they have a new chairman, Tolga Kumova, who is a very prominent guy in the Australian market. And even though I don't know the Australian markets as well and the different people involved, he is quite a character, I think. He shows himself some pictures with Ferraris, and he's showing his bodybuilder skills, and he's showing his wife and his friends, and the bar and the beer and the booze. So he is quite eccentric, and according to news releases or articles, made about $90 million between his Mozambique story, a gold story, Bellevue, and I think one more big story that he was involved in. And if such a person gets involved in a small company like Macro Metals, as far as I can assess, that's the complete reason of this company going to a $111 million market cap. But this one has 3.5 billion shares out. So in Australia, they don't really care about the 10 or 20 million shares out thing. They just don't mind the stock being at less than a cent.
I don't know the guy, but I know these pictures alone are enough to make a bunch of people hate him. So, and I don't know how his pictures were before he made the money. So, yeah, it's interesting, and it's also, but what this is making me think about the most is that if this person is already involved, isn't it like too late? Like, everybody already knows that he's in the story, and then maybe it's too late for you to start getting involved. And like if there's a news release and there's a Michael Gentile who we interviewed last week, or an Eric Sprott or whoever buying into the market or buying into financing into a small little $2-3 million market. Like last week, there was an interview with Rick Rule, and the internet went crazy about it because he mentioned a $2.5 million market cap company with $1.5 million in cash, and everyone went looking for that stock simply because he mentioned it. He didn't even say the name, and so it made the internet wonder. But he's already involved, and if his name pops up on filing in a month, then that story is already going to start leaving the station. So you kind of have to be in before it's common knowledge or something like that.
Yeah, and in the Tolga, just to finish that story, I mean, the announcement came when the stock was already up, so I wouldn't have bought it at $100 million. And in the Rick Rule example, it's a pretty short list. I looked at it as well. I think there's about 15 or 20 companies that qualify on the market cap versus cash levels filter. And then you have to look at, his other criteria. And I think there's only 3 or 4 companies left. two of them I already was looking at already, and I never really bid on those companies yet, but I did consider it. But those companies could be part of this list. They are, well, they're not really. I wouldn't say they are failed, but interest has died down, and stock is back down to 5 cents. Pretty good projects if you look at it in a corporate presentation, but whether or not they really are prospective is something you have to discuss. Okay, management team with indeed a history. So in my opinion, there's only 2 or 3 really candidates left if you look at his pitch. And I think both those 2 or 3 companies are all relatively safe to buy because they are at all-time lows, still have a decent share structure and a decent project and good management team. So they qualify this list. And I think if you do a bit of work, you should be able to find out which one it is. I'm not sure if Rick Rule would really be a headline figure because normally you don't see him often being a 10% buyer. So he may be a 9.9% buyer soon and nobody will find out, at least short term. And then you'll probably find out after the stock already doubled or tripled when he starts talking about it in a video. Whether or not you want to be invested in something that Rick Rule is invested in is another question because he's smart and he would get himself involved typically with warrants. And if the stock would triple or quadruple, well, perhaps he would sell a bit of stock after 4 or 5 months. I'm not saying he will, but it's just something that you can never rule out. And especially rule out is a nice way of phrasing it. But yeah, he could be selling. And of course, he has the right to sell if he thinks that he can de-risk after a number of months. I'm not sure if he would, but then he's still sitting on the warrants, and that's the point. Maybe when people find out he owns it. So always be careful in buying something just because somebody like Rick Rule buys it. But
Yep.
Yeah.
Oh, I agree. I agree with those points. What else are we talking about? Are we going to let Victor get into the room and talk to us about a new potential gold discovery?
Yeah, a new gold discovery within a company that already sits on a real gold discovery. So I think Amex is a company that will be sold to a big company at some point. But this new discovery will probably help in that process. So yeah, let's talk to him.
Good stuff. Well, I will just let him in right now. And Victor, we thank you first of all for being here with us today. We'll get into some of the more topical things regarding that Amex discovery here in a minute that Luke was talking about. But I really want to start with something that's even more topical, which is Ferraris and Lamborghini. No, I'm just kidding. But something which is about you as a person and being involved in the industry, because you've been in an industry since 1992. You started your career, but then you've also been involved in quite a lot of stories over time, and you're still involved in quite a lot of stories at the same time. You've just recently, this week, you became also an advisor to Abitibi Metals. So why the choice to sort of go for many baskets to put your eggs in and do it that way? And talk to me about your background.
Yeah, so I started my career in the investment industry back in 1992. Like you said, I was was an advisor with an investment advisor with RBC Dominion Securities. Had a partner there. I moved on to building companies. I really enjoy there. I was managing wealth. Here, I'm creating wealth. That's creating wealth for shareholders, which I'm always a shareholder. If I'm involved in a company, definitely if I'm involved on the board, the majority of the time I'm a sizable shareholder. That's the companies that I really get involved with. So I left in 1999 from RBC and worked with various companies. I mean, one of the main ones that was Nemaska Lithium back in 2009. Sold them the project, which today is the Whabouchi deposit. There's still Nemaska Lithium. That one I was not on the board. I was not part of management. Both Wanda Cutler and myself, we were helping them out on the investor relations side. That ended up going from, we were basically there when the company was still private, and that company did go to almost $1 billion market. That was really interesting. The management did manage to take that company into insolvency, but it's been recently bought back by the Investissement Quebec, which is the state-owned investment company, resource investment company, along with what is today now Arcadium, and they're reporting it should be in production by sometime late 2025, 2026. Gold space. I got involved. If I move on to Amex, got involved in Amex in 2016, late 2016. Agnico was on this property, meaning that it was an option. Agnico had an option to earn into this property. They gave us back the property in 2017. Agnico did great work. We took all that work and we compiled it. And in late 2018, we had the big discovery hole in the high grade zone. I mean the high grade zone. I mean all the other zones are really good zones. Even as open pits, they're high grade zones. But it's really turned into it's really the high grade zone that's going to carry the major economics of it. And you can see by when you look at the in our PowerPoint where you have the long section, every pink bubble there is a 10 gram or more, a pink bubble like a pink bubble there, and you can tell that it's filled with pink bubble. So if I'm looking at that, looks like that deposit itself will be close to 10 grams or more.
If I may, Antonio, just one thing about the career, because Amex I think was very. I mean that's when I started following you, but perhaps before we go really into Amex in detail, I noticed that since 2010, indeed you got involved a bit more actively in the space. Was that related to Nemaska? Because I think between 2000 and 2010, you were probably involved with one or two or three companies. But since 2010, you got more involved, as it seems. Monarch, I think you were involved with, and Canadian Metals, and a number of other ones that people will see on the screen. Can you just tell us how that started? Was there a connection made by someone, or did you decide yourself to become more active in this space, or how did that start?
So so that's correct. So in 2009, I sold I owned like the Whabouchi, what is today the Whabouchi deposit, which is inside Nemaska Lithium. That was mine. I sold it to Nemaska in late 2009. They had a lot of success in drilling out world-class deposit. And then from there on is where I was being solicited by other companies, calling me if I can help. And I would get involved only in companies where I believe that I can help move forward. Yes, Nemaska was definitely I was very involved with Nemaska Lithium from 2010 moving all the way till 2016, 2017, yes.
And this is also so that it increased your sort of profile in the sector, and that's how you got involved with other companies until you got into Amex. And what specifically interested you about Amex, or how did you get involved in Amex to start with in 2016?
Well, it's an interesting story because I actually the first time I met them was I was looking. I was introduced by a common friend, and they were struggling and getting their financings. You had Agnico Eagle there as a partner, there's a place and a time for those kind of partnerships with majors. Like so basically Agnico Eagle was involved at the property level. Versus like if you look at now where Eldorado is involved with Amex, they're involved at the corporate level where they bought a position in the company itself versus being involved at the property level. I always find it very difficult when companies are involved at the property level. So because it becomes very difficult to finance a company. So I got involved. I helped them finance with some of their other properties. I really liked it. I mean, there seemed to be a lot of smoke. If you actually go back to the history of Amex, when they bought the project, it used to be called another company. Amex used to be called the Coleraine. They bought that property from Falconbridge, and then so then after Falconbridge, so if you back up not backing up, you're actually going forward all the way to 2013. Amex made a discovery hole which really attracted Agnico Eagle there, and we got involved right as they were leaving, which was actually like I said, they did a great job at doing the work that they had to do. Unfortunately, they missed the high grade zone. We took all that data, compiled it, and you know, you need some luck in this industry, right? So and we got some, and then we just drilled it all up, and that's where it went. It's interesting because I wasn't there. We were just chatting. We were introduced, and I was looking at the project. I says, "Wow, this project seems pretty interesting." I called up some of my associates that I work with, and that's how we got involved. We've been financing this company since late 2016.
What about your other positions? Again, it seems to me like you have a couple of those. And thinking about it, to me, it sounds one position would sound too complicated to me, but maybe that's a personal thing. But at the same time, like how do you manage all these positions of, again, you just new advisory position here today, but you also have other board positions. How do you juggle all these balls?
Sure. Well, I do work long hours. There's no way you can handle these things if you're not working. Like basically, I work from the moment I wake up till almost when I'm going to sleep. I'm still answering emails and you know, backing up emails. What's important? I'm not part of management on every one of them. There has to be a management team. When I get involved, I'm very clear on the amount of time I can dedicate to that project, and I try to stay with that. Like so there's clear management teams, and I have been getting off. I have been getting off some board like some, and I will continue to remove myself from some of the other boards. Some of the boards where I don't feel that I can contribute or you know, advance things there. I will be clearing that up as we're moving along. But it's like again, like I say, there's got to be management teams. The one that takes up most of the majority of my time is Amex. I like, for example, another one that's looking really great. It's also a gold story in the Shibugumo area. But again, you have a fantastic management team there. You have Simon Marcotte. He's really the leader there, along with Michael Gentile. So we're you know, we're working there, and like I say, when I get really involved, I did invest. You know, management is putting in money there. Our last financing of $8 million. I put in Simon put in $500,000. I put in 250. Michael Gentile put in 250. So that was to show the market that we do back up our projects. And in all our companies, Amex, we've been in Amex. Like we financed Amex from the beginning. Like all my entire position that I have, I bought it in the open market, in either in the open market or private placements. So we do put skin. It's what we call it. We do have skin in the game.
How do you
We
typically get, I'm
sorry.
sorry, Luke, just one last thing on that note. How do you typically get compensated within these companies? Let me just be open about where I'm coming from with this, is that I'm looking out for, you know, there's a lot of serial board members in this space who, pardon the language here, don't do much else besides just be board members, get a salary from 6, 7 different companies, and that's it. How do you typically get compensated for your positions in these companies?
I like, if we take Abitibi metals, I believe I'm going to be getting believe I'm going to be getting options, but there's no there's no direct compensation. Most of the boards, when you're on the board, there is no direct compensation. So it's really when you're on the management teams that you should be getting compensated. And again, you should be getting compensated based on the amount of time that you're actually able to put in and to work in there. So it's really not like, I understand what you're saying. I see that often. It's not the case myself, and you know, and you know, with the associates that I work, that's not how we work. We really put in our time and effort into. I mean, if you look at Amex, like we've raised from when I got involved in the company until today, we've raised over $100 million. And that's quite, as a president CEO, I think I did my job there. That's really, and not only did my job, I continue to do it. There's nothing more that I want to do is increase shareholder value. That is where, you know, I'm tied with the shareholders, because I am a shareholder myself, and I'm a shareholder before I'm management. That to me is very important, and that's the way I operate with all the companies that I'm involved with.
Last week we interviewed Michael Gentile, and so you already mentioned that Northern Superior, and which previously took over Royal Fox, that you worked with him over there. I saw another investment that you joined him on a couple of years ago. Is there sort of a bit of a partnership, or was this just two incidences that you worked together?
No, we're working together there. It's a great project. They're building up the ounces. It's a part of the Chibougamau camp, the part of the Chibougamau gold camp that's kind of been forgotten or there's little bits and pieces, and Michael Gentile and Simon Marcotte have been doing a great job of looking at opportunities. The goal there is trying to consolidate that camp to have as many ounces, to put together as many ounces as possible to make economic, to make an economic deposit. And it takes good skill there to put that together. It takes real companies to if you look at the amount of time, look, there's lots of ounces inside, and I'm sure he must have spoken about it. You've got just the Philibert deposit. There's close to 2 million ounces. There's the Croto East deposit. There's lots of ounces, and they're real ounces. I think in Lac Surprise too, we'll be putting out eventually ounces there, along with the other deposit when they bought Genesis. So yeah, no, it's not a. I mean, wherever we can work together, we're good people get together. Absolutely, we do work together.
But it's not something you want to go forward with and like just try and mostly work with Michael or exclusively work with Michael. Like it's not a partnership and a forming. It just has happened. So.
That's right. It's a partnership. Like he has a lot. Like I think he's involved in probably a dozen deals at least that he's involved with, or in that range. And no, I'm not involved in all of them. I did co-invest. Sometimes I will co-invest. There's another one that I did co-invest, but not. It's this just happened here. We joined the team together in Northern Superior, and this is the one that we're really working with. Michael's been working most of the other deals. He works them with his own whatever himself with his own team. But yeah, absolutely, this is the one that I'm working together with him and Simon Marcotte.
Right. Okay. Well, I better understand your background now and sort of your driving forces. I can appreciate that non-compensation board member positions. That's how I think it should be as well. Unfortunately, it doesn't happen too often. Most of the times, some of the times, it's really that board members get cash payments. But no, I think we can go into talking about Amex a little bit more here. Luke, did you want to ask something else in the background here?
No. I think it's time to go to Amex, and well, I already asked why you joined. I can imagine that it's also in a way difficult that Agnico walks in 2017 or 16, and that you have to do it on your own, which in a way is better because you can finance it yourself. But of course, they walk for a reason. How did the discovery start in 2018? Was it a bit of a surprise that you suddenly found this really high grade gold, or was it sort of expected?
Okay, I'll give you my view. I'll give you my view on those types of JVs, where you have a major and a junior, where the major is coming into the actual property. If you look at, I mean, I'm sure there's somebody is gonna end up coming up with some positive examples out of that. I personally don't see how it, like I can give you plenty of examples where what ends up happening. Look, I'll give you an example. So in this deal here, Agnico had to spend, it was $4 million. Yeah, it was $4 million. They had to spend it over 3 years. They got an extension at some point, and that was going to be able to get them all the way to 65%. Yeah, I'll let go the other just for time purposes, all the other smaller details. So just imagine, and I'm going to exaggerate this and say, so just imagine Agnico Eagle comes in and says, okay, now I'm going to do a $20 million program. So your share is $7 million. How is a junior company going to go find $7 million to finance this? And even if it's not all in one shot, even if it's over a period, like here as an investor, like I wouldn't be investing in a company where you don't own the property anymore. You only have a small portion of the property. There's going to be a lack of news coming out. It's like their priorities, a major's priorities are not the same as a junior's priority. So what I'm trying to get at is that I actually, if Agnico Eagle was going to end up becoming the operator, I was going to walk from there. Our investment was very limited because and they did have the money that we raised the first time we got involved was for some of the other properties that are in the project. I don't see a positive outcome, but again, there is a time and a place for those type of transactions. And that to me was not the time and the place. Like you said, I would rather finance the company myself and do it myself, even if it's at $1 million at a time. Do a program, come back, do another program, come back. So when Agnico left, it was actually a positive thing. And again, I'm saying that I'm not saying anything wrong about Agnico. Agnico did the right work. They really did the right work. And it was thanks to them that they did the right work. We were able to take this work, compile it, and move it forward. I don't see anything positive coming out of a major walking into at the property level. Like I've been involved in many of these types of discussions with other companies and other assets, and I would never like even if I back up to Nemaska Lithium at one point. One of their investors, their Chinese investors, Tianqi, they call it, it's TINQI. They had invested $8 million, I believe, sometime in 2011. And it took a long time for them to put in the money because they actually wanted to invest at the asset level. The problem with that is you invest at the asset level, it'll be very difficult for you as a junior company to continue raising money when you don't really own the property anymore. So getting to that, I was saying, when Agnico left, we were not unhappy. We were actually happy because now we have the ability to raise money. We can raise money, and we went out there and then when it comes to how did you make that discovery? It was basically taking all their data, because when they walked, they gave us all the data, compiled it, and did a 3D compilation. And bingo, we ended up hitting the high grade zone.
And so that high grade discovery was, I think, in December 2018.
That's correct.
Was that the model? Like, was this high grade zone that something that you had in mind, or because recently you found longer intercepts, more bulk tonnage type material as well? But over the years, you have mostly drilled really high grade material over a number of meters. Was that the model to find a high grade discovery, or was it just the right rocks and you would see what you would find? How much can you really look for a type of system?
Well, the system was known. I mean, this property was being explored since the late 90s. So we had a lot of data. And when you look at that, so what you call here the Shikobi Deformation Zone, when you look at the Abitibi Greenstone Belt, the Shikobi Deformation Zone is sitting right in the middle, and on that belt itself, in that specific area, the only other mine that was there was a VMS mine. That was the Normetal mine, which it was a high grade copper that would get shipped down to the Horn smelter. So the thinking or the theory behind that is that specific deformation zone only that's what it represents. It represents Jacques Rossi. I think he deserves one of the zones to be called after him. So anyway, geologist. I think that's really great. So we ended up like he kept insisting that there's a gold system there. There's a gold system there. So it was what we call today the Eastern Gold Zone, which really the only known deposit at the time was the Denise Zone. And as they were drilling the Denise Zone is when they entered through the high grade zone, and we found other zones after that. I mean, the good thing is that we chased the minute we hit it, we chased it up, chased it down. We were doing nice step up, step downs. But yeah, it was really exploring along known zones and using the 3D compilation, trying to find where can there be other zones. And I think that's where this project is going to continue making more discoveries. It looks well endowed with gold, this project, like that entire Beaupré, the Beaupré block. When you go into our PowerPoint, the Beaupré block is like the peachy colored the peachy colored stuff. And normally rhyolites are not, so that's a sodic rhyolite. Usually rhyolites are not, I think they carry 10 to 15% of the world deposits. Where you usually find it is on the southern part where you have that, all the green there. That's the andesitic rock. That's the volcanic rock. That's where you normally find deposits. And there's been holes that have been going through it because going through the Beaupré block into the andesite, but there hasn't been one target yet that's been there for gold, at least not from us anyways. So that's another area where I think we're going to be making. I mean, obviously that's the hope that we're going to continue making discoveries on this project. When you look at the amount of zones that we've discovered, there's still a lot to discover.
How much of a priority has this new discovery become in terms of time that you're going to spend on it, but money that you're going to spend on it too?
Well, it's interesting because this is more of the this is more like, again, I'm not a geologist, but this is more what they've told me. This is more the classic rock. This is normally where you'll find deposits. It's not like the other ones. The other ones are really were more of the high grade nature, except for the Denise zone. You had these kind of actually a little bit higher grade, but these are the type of intersections that we found. But again, this is just the discovery holes. These are discovery holes. Now you try to understand that system, and you would we'll try to target and see if there's actually higher grade areas. What's nice is the long intercepts that are there.
Is
But
that
yes.
really changing the entire game for you? Like, I mean, so far it was high grade. This looks like bulk tonnage type material. Does this have a potential for, and of course, it's a bit early to even go there, but would this become a D2 lake or a malartic type? Or is this just sort of a nice addition to what you already have, which is a really high grade, sort of medium size project?
Yeah, the potential is blue sky there. I wouldn't be able to tell you, what yes, we want to turn this thing into, as big as possible. That's why we continue drilling it. We have 5 drills. We have 5 drills on the property. When you look at, again, if I go back to the Beaupré block, you have the Normantal zone, you have the Normantal fault to the north, you have the Perron fault to the south, and where there's the N110 zone, there are subsidiary secondary faults within the Beaupré block. When you add all that up, there's well over 20 kilometers of I can call them gold bearing faults right now, at least the ones that we've drilled. And we've basically, if you add up how much of it we've tested, you're looking around 4 to 5 kilometers that we've tested, and that's you can look at where the red areas are, and that's pretty much where we've drilled, and look at all the blue sky that we have. So there's a lot of blue sky, and to the north on the Normantal volcanic complex, that what's interesting there, that's normally where you should find VMS deposits, and again, we didn't want to. We know that there's a big VMS potential, especially that you have the Normantal mine just 4 kilometers to the east of us. But I didn't want to confuse the story. It's important for me. It's important to move forward with, you have a path. It's gold. You have enough for this thing to have. You have size. You have good grade. You continue discovering gold. Now again, bulk tonnage works. If it's there, it's there. But you continue drilling it to see if you find even higher grade. But those kind of numbers blended in, with higher grade material, it works, and that's a lot of tonnage. Like you should, if you can actually turn it into a nice deposit, you should get some good numbers coming from there. But it needs to be drilled.
What the difference? Because I'm assuming there's a difference in primary and secondary mineralogy here. Would that mean that? Well, I suppose we shouldn't call it ore, but we can call it potential ore here. Would that mean that this potential ore would be processed differently than what you already have?
Now you'll need again, with all the waivers. I'm not a geologist or a metallurgist, but metallurgy will definitely play the role in there, because so far when you look at the metallurgical results on we have them on, again, it's on site, it's on our presentation. On the high grade zone, it's mostly all free gold. There's 3 steps where you're doing gravity, you're doing flotation, and after that you're doing a cyanidation. So with the high grade zone, you're actually skipping flotation. You could go straight to the cyanide, and you're actually at the 99 plus. For the rest of the zones, it's a little bit less. You're still talking about 95% recoveries using all 3 methods. It's really too early to talk about the processing. You need to do metallurgical work, and before you're going to do the metallurgical work, you want to make sure you have a deposit. And that's why we had about a dozen holes in it. Like we don't call them zones. We don't call them zones until they're we will not call them zones until we put enough holes in there to look like, okay, you can look to build a panel eventually to do a resource.
Yeah, well, Victor, none of us are metallurgists or geologists either, so you can lie to us and we probably wouldn't know. But
What about when Eldorado invested? Do you think that they did that because there's any synergy between their operations and your operation, or do you think this would always be a standalone operation because of the distance and the type of system?
No, I don't think that. I mean, look. I'm gonna guess here that Eldorado looked at the high grade zone, and you look at Lamaque. Lamaque is a high grade system. So I believe they see a lot of potential in the high grade zone, and hopefully you can find other high grade zones on the property. Synergies like sending it over to their mill. No, this is really going to be a standalone. Like we're going to put out economics on this project. We're going to put out the MRE and then economics on the project this year. It'll come out this year. The PA will definitely come out this year. And it'll show like we'll put in different models, the different economic models, because you can do that in a PA. By the time you get to a pre-feasibility, you'll have to choose the one that you want, but it should show numbers that it could be it could and will be a standalone project.
But in terms of distance, I'm looking at the map and it's just a guess right now, but I guess it's about 120 kilometers, maybe even more to their site. So would that even be possible, or is that just too much to truck?
I don't think so. I don't think it's possible. I mean, you could definitely send over the high grade. So let's say if you're the high grade zone, definitely, when you look at the grades that we've been doing, yes, you can send that over, but not the balance of it. It would be too costly. I mean, you'd have to do an economic trade-off study to evaluate that. You do have the Hecla's Casa Berardi mine just directly north to you, 60 kilometers away. It'll take you about an hour versus 2 to 2.5 hours. So your trucking distances are a lot. Like if I'd have to toll mill, that's where you want to toll mill the closest possible. But again, it's not a toll mill operation here. It's not, you don't have it's getting quite large. I mean, we've put in 450,000 meters of drilling. There's going to be much more drilling going on. When you look at other projects like Osisko's project, where they've drilled over 2 million meters to get there. I believe they're at 7 million. They're at 7 million ounces now. They're in reserves or M&I measured in M&I. So there's a lot more to discover here. And again, I'm not discounting. I just don't want to confuse the story. I'm not discounting even the VMS potential. There is a lot of VMS potential on the project. But I didn't want to be one of these guys or these projects that, today copper's hot, so I'm going to talk about copper, and tomorrow, no, it's really, you have to stay consistent. You think forward. I think we're going to have a great gold market. So you continue along this path, and eventually we can continue working on the VMS.
What about Hecla? Are they could they be interested with Casa Berardi because that's also a multi-element mine, right? Is that VMS or?
I haven't done much work on what it is, but I do believe I know they're processing mostly gold there. I think it's they're processing mostly gold. I mean, when you look at their announcement that they put out, they're going to be shutting down their underground operations, and they're going to be permitting an open pit. So their mill will actually be in care and maintenance for 2 to 3 years, starting sometime in 2028. So there would be a toll milling possibility with them. Again, look, I'm just speculating here because I know this gets out. I'm just talking, right? It's not.
Yeah.
It's not like I don't talk. There's been no talks about that at all, or anything. So I'm just saying, when you look at the location, you look at the map, you look at that, you say, oh well, that's probably the best one to go after.
You mentioned open pit mining, and not necessarily in Quebec, but around the world there has been opposition against open pit mining, with companies sometimes highlighting their underground potential because they realize in the jurisdiction, like in Mexico, it's a concern. Is it a concern in Quebec at all, or do you think open pit mining is fine and it's just a process that you have to go through in terms of permitting?
Yeah, so far in Quebec, it's really a process that you have to go through. You'll have to show like you'll have to have a rehabilitation plan at the end where the monies are put aside, and it's whether you've deposited the money or whether you have a bond insurance, and like a closure plan. There has to be a closure plan down the line that's already financed. What you want to avoid worldwide is that having these companies extract all the minerals and then they don't want to do their cleanup. They go into bankruptcy, and they walk away. I think that's where the black eye is in this industry. And I'm all for clean mining. Like it has to be done in a sustainable way. You have people living nearby there, so it has to be done properly. And look, it's a process you need to go through. And yes, you can open pit mine in Quebec. I mean, if you would look at the big open pit of Malartic, it's quite something. But again, it's done in an environmentally safe way with the closure plans. Yeah, no, Quebec is fine so far.
True. What do you actually, where I was coming from with my questions, and I think this leads up nicely to it, is thinking about what you already have, and specifically the economic studies behind it, and where that starts is going to be an MRE,
That's
which
correct.
has for you been pushed back. When do you think you're going to have the MRE, and also why is it being pushed back?
Well, look, what's important is that the MRE that you put out, um, and subsequently you'll be putting a economic study with it, a PA. You really want both to match properly. You want all the groups working together, but an MRE does have to go out before that. We'll definitely update the market where we're going, where it's going with that over the next couple of weeks. And that's pretty much as I can say on that part. It's really drilling, moving it forward. Look, it's all very positive. There's nothing when you look at these kind of results on a constant basis, on a continuous basis. There's really not, like I don't see anything negative about this. But yes, we will put out an MRE, and we will attach an economic assessment with it.
So there's no guidelines that you can give us in terms of timing on when that MRE is coming out.
I don't have one right now. I'll probably have one in the next couple of weeks. The team will put something together and put it out to the market.
Okay, so you got a news release that, or you're gonna put it out in a news release.
That's correct.
Okay.
That's correct.
Good.
In terms of financing, you did a very big financing in 2021, I think. There was charity flow through at the all-time high. I think the price was $4.80, but it was a charity, so it was I think a $3.20 share price. So well timed in hindsight, because it was really the top, I think, of the market, but also in your share price. Is that all-time high for you an important thing in terms of, I mean, most companies at some point want to sell, and I think you've got the quality here that Eldorado is not investing for no reason. So the potential is certainly there that the company will be acquired at some point. Is that for you an important thing, a share price all-time high, that you want to match that at some point? Or is it just, you do the work, and in the process you will see when a bid will come, or if a bid will come, and that's when you will decide? Or is that a psychological thing for you, that you say every shareholder that has invested in us has to make money, and that's why $3.20 is an important point?
Look, what's important here, myself and people I work with, is giving shareholders, creating wealth for the shareholders, maximum wealth that we can, shareholder value, and at the end of the day. So this is something personal. Like yes, I'm the CEO of the company, but again, I'm basically, the way I view it, I'm a fiduciary to the shareholders. So if there is a deal that comes to the table, we take it to the shareholders, and shareholders are going to decide whether, the shareholders altogether will decide whether they want that deal or not. For me, what's important is to continue to create shareholder value. How you create shareholder value in a company like this is to continue to drill, continue to build the fundamentals, which in this case will be ounces when we put out the MRE. have a good economic study behind it. Now, a lot of people tell me, are you going to sell it or are you going to build it? Well, we'll definitely have to show that we can build it. We're going to be adding people on, we're going to have to add professionals to the team, people who have already built it. We brought on Jonathan Gagne. He was a mining engineer over at the Greenstone mine, which just got built. They've started or starting to pour gold any day right now. And so that's where we're showing that we can go along that path, and we will go along that. Now, along the way, if somebody decides to buy you, then it's going to go to the shareholders. The shareholders will decide whether they and I'm a shareholder also, but it's going to be the majority of the shareholders will decide. I mean, and look at this major shareholders. You still have Eric Sprott that owns approximately 12% of the company. You have Eldorado at 9.9% of the company. So there's pretty good, there's pretty good shareholders there. There's a bunch of other institutions also that professionals that will know if they want to take the offer or not take the offer, if and when an offer should come in. But at this point, all we can do is continue building the fundamentals.
With Eldorado at 9.9, is that sort of the ideal position you want to have them in, rather than having an immediate 20% position, sort of a blocking position? Is 9.9 the ideal points to get a major in?
I think it is, because at 19.9, it's like you're telling the market, I'm engaged with you, right? I'm engaged, and I don't know if I'm going to marry you. I'll decide later if I'm going to marry you, right? So I think 9.9 is fair, and let them decide how, where they want to go. I think it's good that, because you do create competitive tension. I mean, and all at the same time, respecting all your shareholders, because they are a shareholder at they are also shareholders. You still have to respect them, but I think it's fair as a shareholder. I think you keep the doors wide open, and you keep the competitive tension going. I think it's fair. It's fair for everybody.
You say that you're basically going to see as you go, but you probably have something like when you're in the shower and you're thinking, unfortunately for you, you said you work long hours, so I'm just going to assume you think about mining all the time. But when you're in the shower and you're thinking about this company, what are you thinking? It gets taken over in 3 to 5 years, or do you think, oh no, we build a mine here in 10 years, or how many ever years it takes you to permit it? What are your internal thoughts?
My internal thoughts, I mean, once you put out your economic study, you'll put out your MRE, the majors, or I mean, here I'll call them the producers. The producers will have they can do their own internal models, internal studies on their own, even before I put out the economic study. But I think the day that the economic study comes out, they'll really start going through analysis and trying to see how profitable this mine is. And that's when I think things will really start to ramp up. And again, there's a lot of factors here, right? I'm making it very simple. You're gonna have to assume that you have a good gold market going through good. There's a lot of good things going on. But again, for us, what's important is you keep on building the fundamentals. I mean, personally, what I like to do is you start from zero and take things to $1 billion. That's what I like to achieve. Now, the time that it takes, but that's really what you should have, and that's really what And if it falls somewhere in between that, well, so be it. Again, the shareholders will decide. It's the shareholders that are going to decide what to do. As a shareholder, I would love this thing to go to $1 billion and more, but that's all going to depend on the fundamentals of the company.
Has it been a consideration to not do an MRE like Virginia did in 2004? They found Eleanor never did an MRE. Great Bear, of course, another one that got it done without an MRE. Has that crossed your mind? Or was it when Eldorado came in, or maybe before that, I think, that you started signaling like, okay, we have been drilling for so many years, we need to show something to shareholders?
Yeah, I think it's okay to send, like, I definitely get the model of these other models where they won't put out an MRE. Like I think That's right. They won't put out an MRE. I mean, there's a bunch of other companies that don't like you mentioned some of them, and there's actually other companies right now that they could put out an MRE if they wanted to, but they don't. But I think attaching what's important is attaching the economics to that MRE is really important, showing that it's a standalone versus a toll mill. So what you should be showing the market, and again, we'll only show it once we put it out because I don't have the numbers, I don't have anything to show right now, and definitely not until it's released. But you want to show that it's robust enough that it's a standalone, low capex, and very profitable, and that there's lots of blue sky potential. Which the blue sky potential, you have it here because there's so much of the property. To continue drilling here.
All right, well, makes sense. Well, it's good for me. I've got a good overview so far. Maybe one last thing is, did this discovery that you made recently, did that play a role in terms of sort of delaying the MRE? Is that going to be included in the MRE anyway, or is it really the high grade zone that you have been working on so far?
Well, the high grade zone, there's going to be if you look at what we have on the PowerPoint. The zones the zones that should be in there is you've got the high grade zone, you have the team zone, you have the Nice, you have Gray Cat, and you have the Gratien zone. Those are the 5 main zones. I don't know if it'll make the cut. Make the cut in the sense on a timing issue. But it's fine because if you back up and you look at Detour, Gerald Paneton did an amazing job of he puts out an MRE, and he had an MRE almost every year and a half later. He just kept updating, and he really grew it. So you show what you have, and then you show that you could continue growing it. I mean, that could be a plan. That could be something that could happen here also. But when you really look at where we're located, like the location is incredible. You can drive from Montreal or Toronto 7.5, 8 hours. You'll be on site. You have a town there, so the town's got about 700 or 800 residents. Just 23 minutes away from there, you have the town of Lassar, which has 12,000 residents. You have an airport there. You have an airport there. It's open seasonal right now, but you could open that airport if you really need be, but there's no need to open it on during the winter right now. So you have labor, you have electricity, you have water. You're in a good jurisdiction. Good relationship with the First Nations. The First Nations are already used to getting their royalty payments from it's the same group. It's the same group it's the Abitibi-Winnie, the Picogan. So Hecla's Casa Berardi operation, they do have an IBA in place. That's an impact benefit agreement. So they do so they're so far the local community, First Nations, all very supportive of the project. So that's what makes this project really interesting. I like working in good jurisdictions and when the community is behind the project.
I always find it funny when Canadians talk about distances, because over here, if you drive 8 hours, you'd have crossed half the continent, literally. So. Anyways, no, I think
I was about to say that. I know for Europeans saying 8 hours exactly, you probably cross 3, 4, 5 different countries while you're doing that.
Yeah.
Yeah.
I think it's been a good overview, Victor. I don't have any too many other questions. I suppose we could keep talking about some of the smaller stuff, but I know our time is almost running up here with you. So thank you for investing your time. Luke, did you want to ask something here at the end?
Well, you put me on the spot here. No, I guess I asked all the different questions, so I have nothing else to really ask about Amex. I am interested in. I mean, if it was just if we had 2 hours, I would ask more questions about your career and certain decisions. But let's do that at a different date.
I can come back anytime with you guys. Anytime. I'll and we could schedule it for a couple of hours. Not a problem. I'd love to come back. I had a great time here with you guys.
Thank you, Victor. Thank you for investing your time with us.